All right, Darshan, stay on with us because we have some analysts also joining us. We have with us Mayuresh Joshi, the fund manager at Angel Broking, on the phone line with us. And we also have with us Meeta Shetty, who's with Kotak Securities. Ladies and gentlemen, both of you, good to have you on the show. Coming to you first, Mayuresh. Is it as per your expectations, 479 crore rupees of PAT? Of course, there is a component of exceptional loss, but apart from that, the company had alerted on the profit alerts and had flagged off that it will be way lower. Are these numbers, as far as operations are concerned, as per your expectations?
Good evening. Yes, I think clearly operationally, I think the numbers are more or less have exceeded our expectations. Clearly, I think profitability was expected to get impacted more or less to do with the Ranbaxy merger-related issues, the remedial measures that Sun was expected to do. But again, I think clearly the EBITDA margins that have come through is what I heard from your analyst is way beyond our expectations of 25% that we had worked out.
Right. Coming to you, Meeta, how do you read into these numbers, and do these kind of 479 crore rupees of PAT figures, of course, with an exceptional component there, does it call for a re-rating of Sun Pharma stock come tomorrow morning? How are you seeing the stock?
So I clearly see that these are obviously one-off costs that they have clearly mentioned, and they may not be repetitive, at least, to the quantum as well as in the coming quarters. They have said that this is on charge account of some impairment of fixed assets, which I don't think should be repetitive. So I clearly see that on the operation front, they've done very well, exceedingly well. So they are at the operation front, they are ahead of our expectations as well.
Hi Meeta, this is Darshan here from the research team. If you're looking at it, Sun Pharma operationally close to 28% margins that have come in. We don't want to look at the profit number because that has an exceptional. As far as the numbers were concerned, post the guidance warning that they had given, did you actually go ahead and cut down your estimates as far as the top line and bottom line is concerned? And compared to your estimates, how do these numbers look at?
So, yes, clearly I did cut down my estimates. We did revise our FY16 numbers, although on the FY17 we didn't do much, very marginal, about 3%. But on the FY16 numbers, yes, we were down by close to 20% post the call that in which they indicated. And as far as the expectation for this quarter is concerned, if I adjust the forex, the one-off element, then it is slightly ahead of expectation because we were looking at an operational profit of about 922 crores and it is come in about at 1060 odd if I adjust for the one-off. But we also have to keep in mind that the other operating income this time has come in very higher. So, we need to see about what that element is, and then probably we'll have some more clarity whether operationally how good or how bad it is.
Mayuresh, we don't have the exact numbers as far as the US markets are concerned because the press release is not out yet. But two questions. First of all, tax rate this time is as high as 33%. What do you anticipate this such high tax rate? Because Sun Pharma usually the tax rate is very close to the single digit number or the low double digit number. And secondly, what did you make of the Taro numbers that came in a few days ago? Do you think that poor performance on Taro would have been impacted anything as far as these numbers are concerned?
So clearly, Darshan, I think on taxability front, one really needs to understand why the sudden jump has come about. But clearly, I think if you look at how Taro's performance was, I think it has been a reasonable performance by Taro. There was a sales volume decline because of the increase in competitor activity in the US markets, and there have been pressures in terms of the continuing consolidation that you've probably seen within the niche segments that Taro operates out of. However, I think the performance was quite satisfactory in my opinion. And clearly, I think, as the other analyst was also mentioning, I think if you adjust for the one-offs, I think the numbers have been quite reasonable. So our take is that the stock has done reasonably better over the past few quarters, except for FY16, where the integration issues would continue. And I think that is really a well-known fact for the markets. I think they've got some interesting launches as well. So I think what probably happens with Alactonel, Glivec, I think if those launches are successful in the latter half of FY16, I think FY17 numbers might actually start reflecting more positivity for Sun Pharma.
Meeta, what are the top two questions probably you'll ask the management in the conference call this time around? It will happen later, but in the last conference call they had with the guidance cut, they evaded a lot of questions. What are your top two questions that you'll ask Sun Pharma management and want clarity on for FY16 now?
So clearly, the top of the mind question is again on the halal plant, because I think that is the key for the revival in the US-based numbers for Sun. So one thing would be clearly there. And pertaining to the results per se, some clarity, of course, on the one-off that they have given, and as well as the other expenses, because if I see other expenses, that is improved quite a lot. It's just about 30% to sales vis-a-vis the 41% to sales that they had reported in the previous quarter. So is this run rate sustainable? Because gross margins, although have dipped a bit, other expense seems to have helped the margins a lot in this quarter. So these would be the two key things, I guess, at present, what I feel I would be asking.
All right, so those were the factors that Meeta would be looking at. Mayuresh, what are those factors that you will be really looking into for giving a forward guidance as far as Sun Pharma stock is concerned? You did mention earlier that the stock is expected to remain under pressure for at least FY16. So what are these factors that you're watching out for, and also your stock call there?
So clearly, I think the management commentary on what resolution might be brought about for the halal plant. And clearly, I think in the last con call, the management had mentioned that one of the facilities which are under Ranbaxy is under the FDA scanner for Ranbaxy. If they get some compliance nod in the next few quarters, I think that will have an incremental effect. Secondly, I think would ideally watch out for the launches. So I think what kind of launches the management is talking about, specifically in the second half of FY16. And again, in terms of stock price, I think we have accumulating on the stock. Our belief is that FY16 numbers is, as I mentioned earlier, more or less just stated that would have their one-off profit warnings, and again, I think would have issues related to the remedial actions and issues related to the Ranbaxy plant. So I think our accumulating stays intact. I think the FY17 numbers would appear much better for Sun Pharma.
All right, so better outlook as far as FY17 is concerned, but kind of alerts that have been given by Sun Pharma. FY16 could be under pressure, but as far as Q1 is concerned, operationally not bad, but a one-time exceptional loss has really hit the profits of the company. Thanks so much, Mayuresh and Meeta, for joining us, and Darshan for giving us all that update and the analysis on Sun Pharma's results just trickling in. Of course, that will be one stock to watch out for come tomorrow morning, but most of the analysts are of the consensus that the results as far as operationally the company has not performed badly and has been reasonably well. So all right, so that's one stock, but the other